Bismillahirrahmanirrahim. Dear students, our today's topic is cost of capital. Cost of capital is the rate of return that a firm must earn on the projects in which it invests to maintain its market value and attract funds. Cost of capital is composed of three costs. Number one, cost of debt, and cost of debt is to be known cost of debt before tax and cost of debt after tax. Cost of debt after tax is equal to cost of debt before tax multiplied 1 minus tax rate, whereas cost of preferred stock is noted as KP, and that required rate of return which we have to attain on our preferred stock. And cost of common stock is that cost which is required, or that required rate of return which is required on common stock. So we compute an average, and that average is called weighted average cost of capital. So weighted average cost of capital, company's average after tax cost of capital from all sources including common stock, preferred stock, bonds and other forms of debt. As such, weighted average cost of capital is average rate that a company expects to pay to finance its business. Now we simplify this concept by using a balance sheet. We know that in a balance sheet, the composition of long-term debt and shareholder equity is called capital स्ट्रक्चर. बिजनेस की पॉकेट में ये जो दो लॉन्ग टर्म सोर्स ऑफ फंड्स हैं, लॉन्ग टर्म डेट जो है वो लेंडर प्रोवाइड करता है और लेंडर की डिमांड एज ए रिटर्न इज इंटरेस्ट, और शेयर होल्डर इक्विटी जो कि ऑनर्स हैं, ऑनर की डिमांड बिजनेस की पॉकेट से शेयर इन प्रॉफिट है, एंड दैट इज नोन एज डिविडेंड, एंड दैट इज नोन एज कॉस्ट ऑफ इक्विटी, and lenders required rate of return is called interest, cost of debt. Now how we can compute the weighted average cost of capital? Before computing the weighted average cost of capital, अगर हमें फॉर्म की बैलेंस शीट में दो एलिमेंट्स मौजूद हों और हमें पता हो, वन दैट वी पे एनुअल इंटरेस्ट कॉस्ट, interest expenses which we pay annually, and the long term debt, or sometimes we use market value of the long term debt to compute the cost of debt that will be in the first instance before tax. Cost of equity is equal to dividend amount divided by shareholders equity. अगर हमने प्रेफर्ड स्टॉक की कंप्यूट करनी तो डिविडेंड जो पे किया गया है प्रेफर्ड स्टॉक के ऊपर उसको देख लेंगे. अगर हमने दोनों को जॉइंट करके देखना है, एज ए कॉस्ट ऑफ इक्विटी लेना है, तो इसको हम जो है वो कर सकते हैं. हम नेक्स्ट एग्जांपल्स में, नेक्स्ट लेक्चर में कॉस्ट ऑफ डेट अगर बॉन्ड्स के थ्रू हमने किया है तो उससे कैसे कंप्यूट करेंगे, और जो है वो बाकी कॉस्ट ऑफ प्रेफर्ड स्टॉक है और कॉस्ट ऑफ कॉमन स्टॉक है उसे कैसे कंप्यूट करेंगे. आवर टुडेज लेक्चर इज रिगार्डिंग द वेटेड एवरेज कॉस्ट ऑफ कैपिटल. ओके, we know that weighted average cost of capital is equal to, अगर हमारे पास कॉस्ट ऑफ इक्विटी है, दो ही तरह के लॉन्ग टर्म फंड्स हैं, डेट है, लॉन्ग टर्म डेट है, और शेयर होल्डर्स कॉमन शेयर होल्डर्स हैं, प्रेफर्ड स्टॉक अगर नहीं है, तो हम सिंपली इन दोनों का जो है वो वेटेड एवरेज कॉस्ट ऑफ कैपिटल, कॉस्ट ऑफ डेट आफ्टर टैक्स मल्टीप्लाई डेट ओवर डेट प्लस इक्विटी, ये बेसिकली वेट ऑफ डेट कंप्यूट किया गया है. And in the same manner cost of equity multiplied equity divided by debt plus equity, इसे हम कह लेंगे कि ये weight of equity है. So weighted average cost of capital or cost of overall cost of capital is equal to cost of debt multiplied weight of debt plus cost of equity multiplied weight of equity. Now let's solve an example for your concern. द कैपिटल स्ट्रक्चर एंड द कॉस्ट आर एज फॉलोज. लॉन्ग टर्म डेट हमारे पास मौजूद है 1,50,000 एंड इन द सेम मैनर वी हैव कॉस्ट ऑफ शेयर होल्डर्स इक्विटी 3,50,000. Interest cost before tax is 15%, cost of equity is 17%, and the tax rate is 35%. So for this computation we need a table. हम टेबल के जरिए भी कर सकते हैं और या डायरेक्ट जो हमारे पास जो ऊपर फार्मूला है उसकी मदद से हम दोनों तरीकों से यहाँ पे इसको सॉल्व करते हैं. कंप्यूटेशन ऑफ WACC. हमने पहला कॉलम ड्रा किया, उसमें कैपिटल स्ट्रक्चर के जो सोर्स ऑफ कैपिटल है, लॉन्ग टर्म डेट है, हमारे पास शेयर होल्डर इक्विटी है और हमारे पास जो टोटल कैपिटल स्ट्रक्चर हमने यहाँ पे अमाउंट को जो है वो टेकअप किया. जो हमारे पास 1,50,000 है उसको यहाँ पे पुट किया और उसके बाद हमने 3,50,000 को हमने यहाँ पे पुट कर दिया. अब हम इन दोनों को जो है वो उनका जो है वो सम कर लेते हैं. इज इक्वल टू sum okay. Now we will compute the cost. In first instance cost of debt, because cost of debt is before tax, हमने cost of debt after tax compute करनी है. and cost of debt before tax cost of debt after tax is equal to cost of debt before tax multiplied 1 minus tax rate. Cost of debt, so cost of debt is equal to before tax cost 15% multiplied 1 minus the tax rate is 35%. So now we have it is 10%. Here we will display this 10% after tax cost, and here is 17%. And now we will compute the weights. Weight is equal to 1,50,000 1,50,000 divided by 5 lakh is equal to 3,50,000 divided by 5 lakh. These are our weights. And weighted average cost of capital, we know that weight of debt, cost of debt multiplied weight of debt plus cost of equity multiplied weight of equity. So cost of debt after tax multiplied weight of debt, and in the same manner cost of equity multiplied weight of equity. So we will make a sum of both of these two costs. So our weighted average cost of capital is 14.83%. Now if students are reluctant to compute the cost of capital through a table, they can directly compute the weighted average cost of capital by using cost of debt after tax multiplied debt over debt plus equity plus cost of equity multiplied equity over debt equity. लो इसको हम जो है कंप्यूट कर लेते हैं. इज इक्वल टू कॉस्ट ऑफ डेट आफ्टर टैक्स multiplied, we know that that is divided by sum of long term debt plus equity. We have computed up to here cost of debt. Now the portion of cost of equity multiplied weight of equity plus we know cost of equity is 17% multiplied equity divided by debt plus equity we will close here both of these two functions as well as now we have computed the weighted average cost of capital, that is the 14.83%. अब हमने यहाँ पे भी इस चीज़ को जो है वो रियलाइज़ कर लिया है और हमने जो है वो कंप्यूट करके इसको जो है वो टेबल की सूरत में भी कंप्यूट करके हमने देख लिया और हमने डायरेक्ट फार्मूले की मदद से भी इसको कंप्यूट करके देख लिया है. बोथ ऑफ दीज टू मेथड्स आर अवेलेबल टू कंप्यूट दी वेटेड एवरेज कॉस्ट ऑफ कैपिटल. ओके, अब हम थोड़ा सा मूव फॉरवर्ड करते हैं इस चीज़ को. अगर हमारे पास एक और एग्जांपल है, कंप्यूटेशन ऑफ WACC इफ बुक वेट्स एंड मार्केट वेट्स आर गिवन. अगर हमारे पास सोर्स ऑफ कैपिटल मौजूद है और तीनों कैपिटल मौजूद है, लॉन्ग टर्म डेट भी मौजूद है, प्रेफर्ड स्टॉक भी मौजूद है और कॉमन स्टॉक भी मौजूद है. अब बुक वैल्यूज़ भी हमारे पास दी गई हैं, मार्केट वैल्यूज़ भी दी गई हैं. क्वेश्चन हमारे पास ये है कि कैलकुलेट वेटेड एवरेज कॉस्ट ऑफ कैपिटल बाय यूजिंग बुक वैल्यू वेट्स, calculate weighted average cost of capital by using market value weights and compares the answers both for book value and market value. We know that weighted average cost of capital, cost of debt multiplied weight of debt plus cost of preferred stock multiplied weight of preferred stock, cost of common stock multiplied weight of common stock. And now we have computation for book value weights. We have a table, source of capital, book value weights, after tax cost and weighted average cost of capital. Okay, book values are is equal to, we will place here the same values which have been given in our book value table, क्योंकि हम पहला को पोर्शन सॉल्व कर रहे हैं. is equal to, now we will compute, we will have some sum of these all source of funds. Now we will compute the weight, total debt divided by total capital structure, then total preferred stock divided by total capital structure is equal to common stock divided by total long-term funds or total capital structure. After tax cost is it is already after tax cost is given 6%, then is equal to 13%, then is equal to 17%. Now WACC is equal to weights multiplied costs is equal to this value multiplied after tax cost, then the second value multiplied cost of preferred stock, the third weight of equity is equal to weight of equity common stock multiplied cost of common stock. Now we will make a sum of these costs. It is 8.3%. 8.34% is cost of weighted average cost of capital if we have computed through book value weights. Now let's see, we compute these values through market value weights. We have market value 34,80,000, then is equal to 60,000. Preferred stock is equal to market value of common stock, that is the 30 lakh. We have a sum of all these values. Now we will compute the weights. Debt divided by total capital structure is equal to preferred stock divided by total capital structure is equal to common stock divided by total capital structure. हमने weights जो है वो market value weights जो है वो compute कर लिए. Now after tax cost has been already given in our question data set, that is the 6% after tax cost of debt which is given. We have no need to compute it like in a prior question. Is equal to, now weighted average cost of capital is the simple multiplication of weights and costs multiplied relevant costs is equal to weight of preferred stock multiplied cost of preferred stock is equal to weight of common stock multiplied cost of common stock. Now we will make a sum of all these costs. 11.11% is the weighted average cost of capital. So along by computing the cost through book value weights and the cost through market value weights is a difference of, both have a difference of approximate 3%. 8.3% is 8.434% is weighted average cost of capital through book value weights, and through market value weights it is 11.11%. So in this way we can compute the weighted average cost of capital, and we can use the target weighted target capital structure. We can also compute the target weighted average cost of capital. Thank you so much.